Hey there, traders. What's going on? Jamie Saettele here with your July 15th, 2015 Midweek Strategy webinar. So, apparently the dollar can't lose. I'm hoping that the exasperation that you hear in my voice is a sign that we're near some sort of an exhaustion turning point in this psychology regarding the US dollar. Um, so we've got a lot to get to today as far as just the dollar in general is concerned. We're going to go through the review of the charts posted to the long-term page, the weekend charts that I post, the daily and weeklies. Take a quick look at there's a dollar Swiss euro dollar divergence right now. Of course, we'll look at the S&P coming up on an interesting spot. And then look at some of the EMs here. And then Kiwi, I mean, uh, you know, we had the setup. The trade obviously didn't work, but the setup, there's the kind of setups that obviously you look for: tight stops and high reward to risk. So just to review why we had that setup in the first place, there was a bottoming type of formation that was visible. And obviously it's not, it's not a bottom until you break through the top of that formation, right? But the entry that we were on, or where we were trading was, I believe it was this one here. It was, and you can see we found support there yesterday and really rallied, saw a good move up yesterday, and that spike higher right into the median line. The structure, to me was a good sign that once we came back, we'd find support, and we did find support for a couple hours. And then, of course, the Humphrey Hawkins testimony from Yellen sent the dollar ripping higher, starting obviously at the 9 o'clock hour. So, her testimony started at 10, but her prepared statements are read beforehand. So that's why all that started this morning. Talking with someone, a colleague and some guys at some banks, and just absolutely dumbfounded how, I'm not gonna lie, I'm not gonna pull any punches here. I'm completely shocked at how the market reacts based on what these clowns say, about, raising rates, this and that. Okay, been saying that, their own forecasts have said they were going to raise rate for like 5 years. And I don't know, it's just strange. But we'll look at QB in a second. I want to look at some of just the general macro stuff. So when you hear in the newspaper later today or tonight or tomorrow, whatever, that the dollar rallied because the Fed said they were going to raise rates, I want to show you, we're going to look at some treasuries, okay? This is the 30-year bond, and, this is the long end, right? It's actually up a decent amount today. We're up 0.7%. That's a decent move in bonds. It'd be a huge move in bonds, back in the day, but the volatility here is substantial right now. So we have a decent move. That means yields are going down. It's not just the long end. If you look at the short end, when bonds go up, that means yields go down, right? So when you look at the short end, the 2-year, they're flat. And you can see we did spike lower earlier today. In other words, rates did spike slightly higher, but not even to, a new low for this move. And now we're back flat on the day or up. And if you look at Fed funds, so we can look at like December 2016, they're actually up a little bit too. It's not like this is a rate move. So, the dollar interest rates have not gone up today. But yet the dollar is just is higher. And commodity currencies and commodities are just getting slaughtered. So, yep. Again, hoping that my kind of sick feeling in the stomach is an indication that the market's going to turn. Someone once said, when you feel like throwing up, double your position. So it's kind of how I'm feeling right now. Um, let's go through the charts now. All right, so we'll go, let's see, let's start with Euro and just go down the line, right? All right, so Euro, again, here we are, the state we're kind of breaking below here now, but, um, close back above 109.80 today would be good. But if this is, if we're going to fail here, then the next, level for support here is in Euro, I don't think is probably until this line here, right? It's the March, uh, the line off the March and April lows, okay? And that would come in, over the next few days. It's all the way down around 107. So, notice how I like put out the kind of the general, general thoughts and opinions or whatever on, what I am thinking or, sentiment wise with dollar and stuff like that. But when it comes to the actual trading of your money of your account, um, you can't just be like, well, I'm bearish the dollar, so I'm just going to be short the dollar, right? You do have to have, a defined exit, entry, okay, risk defined. Otherwise, you're not gonna make it. So, um, with the euro here again, I like the triangle idea, but we continue to fail to move higher off this, or we moving higher, but we continue to press into this support. So if we close down here, I mean that's kind of wouldn't be a very good sign as far as the near term picture is concerned. SSI actually, FXCM SSI is actually negative 1.2 right now. So it's still just, retail is still short, but they're pretty close to flipping long. So, they've been short for months, months and months and months, basically since the low. Okay. So a flip here to the positive side, that could be a fairly significant um, indication that something is happening. All right. As far as identifying slope resistance to trade on, let's see if we can do this together. All right, so I'm gonna start with a clean chart here. Okay, so here's the month open, right? Up here, 111.39. So I know this one doesn't work, but I'm just gonna draw it anyway. This one's no good, right? After we broke through there, I thought that was a great indication we're gonna go higher. Didn't work. This one also doesn't work. Might have to go with something more like this. Okay. Oh, that could be something that ends up working. All right. So here we are. This might be a level or something to pay attention to for euro. Go to a 4-hour chart here. So this is interesting because again, we've got you get the median line, you get the median line, you get the median line, testing the median line. And what you would do here, what I would do here, and I'll include this in tonight's post, is then draw, this is downtrending, so you'd look for resistance now at downtrend resistance, right? And in this case, this is a line to watch. Okay, right here, this line right here. So, if we're really caught between a rock and a hard place, right? Because we do have still, if the euro can recover and end over, say, again, about 109.80 or something today, then we could still see, this triangle thing, play out or, work. But at the same time, you would be very wary of the long side or pressing the long side, I should say, as you get up into these levels here. Okay, that's something you would watch for, be aware of resistance. And maybe we do get a bounce here and we get a bigger than expected bounce, and the weekly open price up here would be 111, 110.98. That could end up being something over here much later in the week. All right. So just, kind of taking you through how I'm thinking. The dollar itself, go back to the dollar index here. Nothing's changed from yesterday's comments as far as, the sentiment of the dollar can't lose. It's kind of like how gold was viewed back during its run up towards the end. Everyone talked about inflation was good for gold, but so was deflation, right? So gold was an inflationary and deflationary hedge. Well, now we have the situation where the dollar is bullish when there's chaos in China and Greece, et cetera. It's a safe haven. But then when the chaos is resolved, the dollar is also bullish because now we can raise rates, right? So that thinking just, screams of kind of, it's stupid. The market's just not in a position to make a giant move to the upside. But hey, go by the charts. If we're not respecting resistance and whatnot, then we kind of got to change. But here we are, U.S. dollar. We're still at resistance. Again, it's a huge spot. I mean, we overcome this, then again, Euro 107 is probably in the cards before we get any sort of a bounce. So we'll pay attention to that as we move forward. So yeah, here's Euro. Okay, and let's say that if we were to have this this move here, there's a confluence down here in 2 days. And we kind of touched on this last week a little bit. Last Thursday, I forget which member it was, but one of the members in here, we were talking about, the possibility of the market really getting thrown off balance, right? And there being kind of a blow off move for the dollar. And if that were to happen, 107 here in a couple days at the lower parallel in this trend line, that could offer a really interesting, spot to play for kind of a V bottom. But in the interim, we'll track for any sort of resistance if we churn around for Thursday. Okay. Let's see what the momentum looks like right here on the short-term Euro charts. Still not registering oversold levels yet, so-called, but not looking pretty. So there's the Euro. Now let's head to dollar Swiss. And I had mentioned that we have a dollar Swiss divergence here going on. You can see the dollar Swiss has pushed above the high from May, right here. And the level you're looking at or looking towards at this point is going to be 96.20. That would be 2 equal legs off the low. It's also sliding parallel up here. Remember, we got support down here at 93.30, 93.29 to be exact. And this bias in dollar Swiss is higher. Dollar Swiss has been kind of it's been a pretty good tell as far as dollar strength is concerned. All this resistance we were getting up here was giving me or having me thinking that we were going to end up breaking down. But look, dollar Swiss is at the best level since early May, and euro dollar still holding above it. This is something that used to work really well. Here's the euro May low right here. It's 108.18. Okay, so we do have a divergence um, between these two currencies, which before the whole SMB fiasco, this used to be a pretty good indication of dollar turns. Okay, at least for several weeks. You'd get a dollar Swiss would make a new high and euro dollar would not make a new low, or euro dollar would make a new high and dollar Swiss would not make a new low. In other words, they're not confirming each other. It's like Dow theory, but for European currencies. So we do have that going on with dollar Swiss right now. The momentum picture on dollar Swiss is pretty ugly. What I mean by that is this is a 4-hour chart, and you can see that we've got divergence out the wazoo here with this latest high up here, and look at close prices. Okay, the latest high up here showing that the price high is, a new price high, but RSI is at like 60, so not even close to to 70 or to what you would consider a strong trend, right? So that is, again, I think today's close is important. I'd like to see if, we are going to see a dollar turn lower. I'd preferably like to see the dollar Swiss close back down here and not up above this line. Yeah, Mark, we'll take a look here at dollar yen in just a sec. I'm going to go through all the dollar crosses. So we have that in play as far as the divergence and just the terrible momentum going on with dollar Swiss. Let's take a look at pound. Pound's one that actually has been trading fairly well with the levels. We unfortunately were stopped out of a long position back here. We were buying on the median line. Then wanted to buy on 153, never got it. Markets turned up pretty sharply. Pound has come into resistance, obviously, from the underside of this pitchfork, okay? And you don't even really need this whole thing on there. You could just put the trend line on there, right? Depending on which low you go off of. It could be closer to 157. Now, 157 is huge. Okay, 157.05 is the month open, and the rally from the low would consist of two equal legs at 157.09. So that 157 area is a solid area to know. The market could certainly blow through there, but typically when you have that kind of confluence, you do get some sort of a reaction. So I would know that there's a lot to pay attention to at 157. Let's see. Oh, here's the 60-minute chart, hourly chart to watch. Here you go, 57.09, right? I figured when I got in this morning that we would have already hit that level up here, given the data and everything that was going on this morning with cable. But as far as cable's concerned now, you're going to want to watch. We're at resistance, so we could come off here, even though we haven't made two equal legs. Also got the 61.8 at 157, so I didn't even realize that. So 157 is big. With pound dollar, pay attention to this very short-term slope here. All right. The break here. You've got a confluence sometime tonight, really around 55.50. For me, the bigger level to watch is just quite simply this median line. It's like what, 155.10, 15, 155.20 tomorrow for Thursday. So pay attention there. And yes, the magenta line is the year open, and pound is virtually unchanged for the year so far. Pretty interesting to note that. So that is cable. Again, cable does, we are working with a very solid bullish structure here, going back basically to the beginning of the year, finding lots of support and strong rallies off of these slope lines. So if we do end up getting back here, it could be a pretty significant buying opportunity. But in the interim, again, range is probably the order of the day, with 157 as the big level to watch for resistance, and the median line near 155.20 or so as level to watch for support. And there goes euro cracking lows of the day, 109.30s. Pound. All right, let's look at Aussie. Aussie, after some consolidation, we took out big outside day here. 73.60 has been reached. That's the 127 extension of the move from the April low to the May high. So what that means is it's 27% of this, which is actually a fib number, 27.2%. So we have obtained an objective here, but we are Aussies in free fall territory below this median line towards the lower parallel down here over the next few days. 71.40s is a huge level because it's the 61.8 extension of the April to May rally. And more importantly, you've got a very, very long-term trend line down there. 2001 low, 2008 low, right? 7 years later, 2015. So there may be some sort of a cycle going on here with 15-year lows, 7-year lows. And that actually comes in mid-August. So that was another where the confluence does. That's another reason why I was thinking that we'd hold up for a little bit with the dollar, but and maybe find resistance at higher levels near 76 or something, and then trade off into August to get this confluence. But would pay attention to if you get down there to the 71.50 area or so. Okay. So that's Aussie. One, two, three, four, five, possible. Kiwi, aka cliff diver. So 65.60 is the 2010 low. Coming into there. Some of you might know what DSI is, Daily Sentiment Index. It's not SSI, but DSI. And it's a sentiment indicator that it's basically a poll of futures traders, and it goes between 0 and 100. Really, it goes between 1 and 99 because I don't think it. Excuse me. I don't think I've ever seen it at 0 or 100. But a reading of 1 basically means that there's one bull, okay, and a reading of 99 basically means that everyone's bullish. So the reading for Kiwi has been in the single digits in recent weeks, which is pretty rare. In fact, they have averages. The 10-day average of DSI is actually 9. So, while it's rare to see, a reading of like 5 or 6 or something like that for a single, day, an average, a 10-day average that's in single digits, that's extremely rare. And right now we have that in Kiwi. I think we might have it in Aussie. We'll just look. So we have it in single digits. We have it in Kiwi. 10-day average is 10, 9.8. And other than that, the metals are really bad too. Palladium has a 5-day reading of 10, platinum 10. So, maybe we're getting into the blowout capitulation phase here. Again, like I said earlier in the oh, Mark laughing. Yeah, it is. That was a picture from that was a picture from like 12 years ago. It's kind of a ridiculous picture, but yeah. So um if we're getting to that capitulation phase, and it feels like it, I guess, because again, you feel sick to your stomach and kind of use that as um a part of your analysis itself. And so if what I say, the 2010 lows at 65.60, I think. Yeah, 65.60. So check this out. If we look at 64, okay, 65. So tomorrow, the lower parallel here is at 65.40 something, 47, 50, whatever, what have you. So that's not far. So that's a level to watch. And there is some news tonight in Kiwi land. I believe it's CPI or something comes out. What do we have? Yep. Kiwi CPI comes out at 6:45 p.m. New York time tonight. So you might want to be just aware of that. Again, I can't advocate for as much as I'd like to. I can't advocate for a long position in Kiwi down here. There's just no setup to do so. We took the setup and we took a 25 pip loss. So that was that. And until it gives us something else to work with here, um, it's not much I'm going to be able to say about Kiwi here in general. It's just kind of a shame. We had just so much on the bullish side with the reversals on the weekly J spikes and pound Kiwi and Kiwi yen, the single digit DSI, you name it. There's a ton of stuff. We had positive slope to work with, so it was kind of a perfect setup, and um, just didn't work out. All right, this dollar yen. Okay, so dollar yen, a level that I would watch, and again, yesterday I had mentioned in the post that this 5-wave move to the upside here in the dollar is coinciding with, or is 5 waves higher. And I thought the 5-wave move was done here, but 1, 2, 3, 4, 5, 6, 7. Maybe this is stretching into something on the order of a triangle, in which complex correction higher. The pattern on the near term is not clear to me at the moment, so I'm not going to pretend to uh, give you some sort of a wave count that I don't believe in. But what I would watch for at this point, and again, I have no trade here at the moment. I'd be watching this 24.15 area. Again, the slope line that you see coming across, okay, is this one here. Okay. So, yeah, so it's this high back here. What is that in 2014 high, December, January low this year, and then the June high. Okay, and what we'll watch for is, to see, because he did have trade on this median line. We didn't quite get to it last time, which was, again, a bummer. We were looking right here, and it was so well defined. Year open price, median line confluence. This is the really long-term one, right? That's upsloping, that goes back to 2012. So we were looking at that 119.90 area to take some profits, and ended up getting trailed out at 22.10, and then ended up taking a short at 23.10, stopped out today at 23.80. So it's been a tough ride with dollar yen here on the V bottom, but levels to watch is basically right here. So I would watch that, crosses through these highs back in early June, or mid-June, I should say, 17th and the 24th. And that line tonight is like 124.15, 124.20, about thereabouts. And I think there's BOJ at some point this week, or did we already have it? Yeah, they already had last night. So, everyone was waiting on this testimony today from Yellen, I guess, which continues tomorrow with the Senate, by the way. So yeah, with dollar yen, 24.15, pay attention to that level, is one that could inspire some sort of a pullback. Again, as mentioned in the post last night, if we do get a pullback from, say, that area near 24.15 or so, what I will be on the lookout for at this point would be support, especially now, because look, you can see the month open at 25 or 22.50. Okay, that actually would coincide now with the former resistance line, which is what we were selling on originally. That would coincide with resistance, or the former resistance lines, which could become support basically over the next 2 days, right? It's like 22.60 tomorrow and a little lower, 22.50 on Friday. So that will be a level to watch out for. In dollar yen. We'll look at some other yen crosses here in just a sec. Dollar CAD, here it is on median line. We're in blow off territory now. I want to show you something in dollar CAD. So you've noticed in the scans here recently, I'm sure, that dollar CAD has been on the so-called extended list. What did we get to? 16 or something like that? So we got to 16. So here is going back several years. The only time that we've been this so-called, again, extended on the upside in dollar CAD is back here in March of 2013, here in May of 2012, and then we did go into a blow off, and that was a top right into the early June, and then the financial crisis. So, and then before the financial crisis, you had some pretty nice tradable tops up here in August of 2008 and January of 2008. So we are in, what I would call kind of dangerous territory, if you will, for dollar CAD. I know they just cut rates. Actually was not that big of a surprise to me, the way the market was trading, but yeah, I would be, careful up here and be wary of, any sort of signs of or pullback, or sign of a top here with dollar CAD. Again, this is like Kiwi. It doesn't matter if you feel like the market's completely extended, overbought, or whatever, because it can get more extended. Um, but just be prepared, for to do something if the market starts to turn over. What was I going to say? I was looking at something here. Dollar CAD. All right, so we've gone through, I think, all the ones I wanted to go through for the most part. As far as the dollar crosses are concerned, we'll look at some other crosses here in a minute. Dollar Turkish lira. This is a market that actually has broken bullish slope here. Remember, this was the elections that we had, okay, back here in June, and we had like a huge gap higher, something like 4 or 5%, I think, and then the market, has come out and filled that gap. Dollar Turkish lira slope to watch, presented here. Again, we're nowhere near a trading level for dollar lira, but I would pay attention, if we do rally back up into the month open at some point towards the end of the month, you could have slope resistance up there. If we do that, then that would indicate that we probably have some serious chop that's going to happen from here to there. There's a median line down here to be aware of. You break below that, that would actually be a bearish opportunity. Look to sell on the retest of the median line up here. There is something to potentially work with here, but with this very short-term one off the top. But again, this is going off a news spike, and I don't really like to do that. But I would keep it on here just to watch and see how the market responds to it. So that's what we've got with dollar lira. Dollar peso, still, like it lower. Stopped out of break even today on this dollar move. Unfortunately, I mean, we still are at resistance, but again, wasn't going to let a winning trade turn into a losing trade, although kind of already did that with dollar yen, didn't we? So that's what we got with dollar mex. And that's it for the dollar for now. All right. So what about current opportunities? Well, I'd watch euro yen here and over the next few days. Just when you think you've got it figured out, like I was feeling real nice about this whole this whole process of the dollar and coming into a peak and pulling off, and the nice reversal yesterday, and then today you just get run over by a truck. But I live to fight another day. Here with euro yen, I would watch for support pretty soon. You've got a lower parallel down here. You do have a fib not far from here. You can see the 61.8 confluence does come in tonight. Okay, so that's 35.01, and that's right here. And that's at like 9 p.m. tonight in New York. So that's during basically when Chinese markets are opening. So you could have maybe some capitulation down here in the short term as far as euro yen's concerned. So I would watch for, you do have a very nice confluence with euro yen with the fib, 61.8. You've also got slope as far as, a downtrend support potentially from a sliding parallel, and what might be new uptrend support from a lower parallel. Okay, and again, this is a good one to follow. This uptrend one, the median line right here through the gap, didn't quite reach the high, but I'd pay attention to 35.01. Okay. For euro yen. Euro Aussie is one that's interesting. We covered over the weekend. We were looking at euro Aussie, and this was written. What did we write about? Let's see, euro Aussie. Pull up the chart. Now the page. You said focus remains 51.33, but we're at uptrend resistance from several slopes that could influence for a pullback or a period of consolidation. And we've gotten that pullback, as you can see here. We've got the pullback, and we have an impulsive decline here in Euro Aussie too. It's a sharp decline. We've got a fairly sharp rally, but we've got a confluence between the week open price of 49.58, okay, and slope, okay, from you've got the median line and you've got a new bearish upper parallel to watch up here. So 49.58 again, that's around 9 o'clock in New York tonight. That would be during, again, Asia. And it's interesting that, if Euro Aussie comes into a high and Euro Yen comes into a low, perhaps Aussie Yen does a little something. So someone just asked a question about that, about Aussie Yen, and let's look at that. Let's look at Aussie Yen then. So long-term Aussie Yen is set up, to kind of fall a lot, right? We've broken below a trend line. The trend line goes way back, 2009 lows. Retest that line would be ideal. It's like 92.80s or something over the next couple of weeks. Short term, week open price is down here at 90.65. I'd watch that. I don't have anything to work with, I don't think, on the upside as far as bullish slope is concerned. Yeah, that's broken more or less. Okay, so that's no good. But weekly open price 90.65. Those are, I love the week opens, month opens when you get moves into those and you have some sort of slope there. That might be something to watch for. Let's see if we get 61.8 or something right there, 50%. Okay, so half the move down is pretty close to the weekly open price of 90.66. 90.66, 90.79. This is an area to watch for support. Again, this is not something I would be buying just because I don't have bullish slope to buy onto or buy into, and I, prefer that because I can put a tight stop, and that's at the end of the day, that's kind of all I really care about is a tight stop. And let the market do what it wants to do. So yeah, with Aussie Yen, as far as short term, could have some sort of a correction playing out from the lows. 90.40 is the 61.8, and 90.32 is daily reversal support. That's the close from the reversal day low back here, 7.9. So you do have potential support around 90.40 as well. As far like if you're wondering what would make a setup here, like how would I, when would I actually look to take a trade on something like this? It would be when, let's say the market trades lower. Let's see. Let's say we trade lower into one of these zones, okay, and then we trade higher off of it, all right, and then we're able to draw slope lines, okay, with 3 pivots like here, here, and down here somewhere. The market come up, hit that median line, come back down, hit support line. That would be the opportunity to buy it, okay, because then you'd be looking for continuation up towards, again, probably that, longer term resistance line that I just pointed out. Here it is. Old support that's become resistance up, up around the 93 area. Okay, so it could be a setup in the process. Longer term, I like it lower. We are, in breakdown mode, and measured level 83.81, currently trading 91.25. So, long-term swing idea is 93s, sell that, take it way down here, 100% extension from the high back in April 2013. And, when you're looking at a pair like Aussie Yen, obviously kind of, makes you think about, risk trends, right? Risk on, risk off. And, with that, why don't we just take a peek at the S&P. So here's the SPY. What's going on here? It's a gold price. The answer to all of this dollar stuff is going to be the gold. Gold looks like it just wants to fall like $200. I hope it doesn't. Okay, so the S&P, right? All the shenanigans back here. Greece is falling out of Europe. Greece is not falling out of Europe. Blah, 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 blah. Ended up probably chopping a lot of people up. But now we're getting into a level after we've resolved the issue and we're getting up into resistance, where, we hopefully can get a sense for, if we're heading to new highs or not. So I'll watch for resistance basically right up here. This is the SPY, so this is the ETF. And, over the next couple days, yeah, 211.50 or so. If we look at the futures, have the same slope for that. This is one to watch, slightly higher. We watch this one, it could be, we might have already hit it. We have, pretty much. So basically kind of already hit resistance in the futures market. So, see how the market trades from here. And here we have 30-year bond up 0.77%. Amazing. Again, interest rates are down. This is not a rates move. Yes, I'm sure that you'll have the headline will be dollar soars on indication that Yellen's going to raise rates or something, but the rates market itself is not really telling you that. And again, we looked at Fed funds earlier. We looked at 2-year, the whole curve, and it's not telling you that. But the dollar is rallying anyway. All right, so dollar does seem to be finding resistance up here. Does it hold or not? I have no clue, can't tell you. Hoping that my battered confidence for the day after this dollar move is a sign that the dollar is going to turn. As the markets make me feel like I take crazy pills sometimes. All right, so enough of the macro. Setups. I like this Euro Aussie trade idea up into here. Week open 49.58. I like the Euro Yen idea tonight. Looking at support, bounce off 135 area 61.8. Okay, those are the two things that I'll probably pay attention to the most tonight. Okay. Daniel, thanks, man. No, I just want to be totally real with you guys, and I want to be honest and just, let you know how I feel, right? I've always been a guy that kind of wears my emotions on my sleeves, and we're all in this together. So, and analyzing yourself and analyzing your emotions is just as important. It's really a part of market analysis and a part of trading. Okay, so the fact that, I feel like this right now, I know how I felt like when I feel like this. I know previous times I felt like this is, right before the market turns, right? I mean, that's what the market does. It's going to go really to the extremes of sentiment and whatnot, and just have to understand that too. So yeah, I mean, I wouldn't change a thing as far as what I do and how I do it, and I love just doing this every day. It's what we do. You wake up in the morning all excited to see what the day is going to bring. So, um, but I also want to, give you guys decent setups as well, obviously. So the week open price in Euro Aussie, I'd really pay attention to that one. Um, Dollar CAD, pay attention up here. Other than that, I just, I'd like to take questions right now. And you guys have questions that you want to look at certain pairs or markets or whatever. Oh, you know what? I forgot. Let's look at pound yen real fast. Obviously, the way we were looking at before hasn't played out, but there is going to be some stuff you want to watch up here. Um, 1, 2, 3, 5 days up here. I'd be watching 94. Let's see, 94.99, which is the gap. Okay. That's, remember that gap. And I'd also be watching for 95.22, which is the daily reversal level. Actually, no, it's not. What am I talking about? That's here. So 94.50, sorry, 94.50 is the daily reversal level. And again, if you're wondering what that is, it's simply the day of the high, it's the close of that day. Okay. And sometimes you'll come back and you'll provide, those days will provide um, resistance or support. Support if it's a low, resistance if it's a high. And especially if it was a reversal day like we had here. That was the spike day, right? Magenta bar. So the spike days in pound yen have called the high here and the low and a fake out over the last, since April, right? Joe asking if dollar yen clears 124.1520, where might it go? All right, well, let's take a look. So if it clears 124, first of all, look out. If it clears 124, 115.20, where might it go? If I have to give you an answer on that, then I would probably, I wouldn't see a trade there, I'll say that. But if I had to give you an answer, the 24.68 area sticks out. It's a 78.6. It's also close to the high back here, 24.70, and that would be the level that I'd potentially be looking at. Because if you think about after the market would take out these highs up here, which would be obvious highs to take out at that point, then you could run into resistance for a pullback. But, if the market can churn up here for a couple days and maybe trade into 24.1520, show signs of a turn, that might be an opportunity to get on the short side for what could be just a pullback, but that would still be like a pullback to 22.50 minimum in my opinion, as a good support. And if it doesn't, if you blow through this, then what you'd want to do is you'd want to see if the market could find support on this line. So, it's not necessarily about, if we go through this, where could it go? It's about understanding that if it goes through this, that could actually indicate potential for a larger resumption to the upside, because at that point you would have broken above this former resistance, former resistance, former resistance. Watch for it to become support. Okay. Pound Aussie and Aussie CAD, Christian. Oh yeah, I'm glad you brought up Aussie CAD actually, because it's actually one that I have here. So Aussie CAD, we've had a major contraction take place in Aussie CAD. Okay, the rate here, 2014 opened here, 2015 opened at virtually the same level, and we're trading pretty close to it right now. Okay, we have slope levels to watch in Aussie CAD a little higher. The month open, 96.22, also happens to be the daily reversal resistance, the high day close. You have slope up here okay? Resistance from a sliding parallel basically over the next couple days in Aussie CAD at 96.20, currently 95.33. We got up to 95.70 today. So you could see something in Aussie CAD where we trade up higher into resistance and then tank, okay? Um, I should just point out this is resistance rather than saying forecasting what's going to happen because, look, I don't know what's going to happen. But I can tell you that this is huge. So if we get up here, there's a high reward to risk probability or high reward to risk opportunity on the short side. Okay, 96.20s. And to indicate, you know, the potential that we've got here on Aussie CAD, I'm going to show you this. This indicator that looks like a wave or something, or a shark fin, is the what I call RSI contraction. Some of you obviously know what this is because I've talked about it before. It simply counts the number of bars that RSI spends between 30 and 70. So you haven't, this is a weekly chart, so you haven't had an overbought or oversold level in a really long time. You know, some of the examples that we've had recently, and the logic here is that as you get, you know, a long period of contraction, the more energy is built for the move. So like here's the New Zealand dollar one, okay, and we had 164 weeks of basically no overbought or oversold level, okay, and that ended in September of 2014, which was right here, okay, and that commenced the breakdown. We had something similar in euro. We had 173 weeks in euro, and that ended in August last year of 2014, right here, okay, with a gap. Still hasn't been filled. So there we have that. And these, the point is, once you break these, you can get bigger and bigger moves. Okay. Dollar yen, nothing really now. But anyway, Aussie CAD has one right now of a reading of 102 weeks, which is pretty significant, right? And we have the Spectre, I should say, fancy little word, the Spectre of a head and shoulders top, right? Been going on for a long time, okay, since basically August of 2013. So, you know, if this thing were to break, then your target is 79.90. It's quite a ways away. But you know as well as I do that once you break down, you know, at that point, you're going to have to take on a lot of risk to enter that trade. That's why I personally, and a lot of people probably don't agree with me on this, but personally, I like to try to get in beforehand with by using slope. So, you know, this might be the opportunity to do it. If we can sneak up into this level, I don't know if it happens tonight, tomorrow, in 2 weeks, 3 weeks, or 4 weeks, or never. But, you know, if we get up into this area of 90, what did I say it was, 94.20, 94, no, sorry, 96.20, then you could, you know, you can look to short with a stop above this high, which is 96, or above the slope, I should say, because if you came up here today, tomorrow, and you know trade, you could trade 96.60 and still be within the slope. So that's something to take note of. All right. Now I do, you know, if we blow through this, game off, right? And then you're looking somewhere else. But I just want to make note of that level. So 96.20 is a big one. I'd pay attention to it. Mark it up, mark it down. Another one, by the way, that has a really big contraction is Aussie yen. Okay. We're at 114 weeks right now in Aussie yen. We're still contracting. So again, eventually, I mean, you can see this. It looks pretty crazy. It's a really drawn out pattern here. How many times you can test support, but eventually my thinking is that this breaks to the downside and that we do end up getting a move all the way down towards 70, a couple thousand pips to the downside. This is obviously some really long-term stuff here that I'm talking about, but throw it out there. Near term, it's not like a near term trade idea, right? Near term, we're looking at something like Euro Yen, Euro Aussie, those trades that I talked about, or those ideas that I talked about earlier. Pound Kiwi, got a question from Sandeep. He is the Pound Kiwi man. He loves Pound Kiwi. We'll take a look at Pound Kiwi. All right, Pound Kiwi, where are we? Well, the head and shoulders target is only 600 pips away, which in this market could be reached in the course of 1 to 2 days. So we're getting awfully close. This is a weekly chart. Okay, you've got lows down here. What's that? 2005, 2008. And then you had a breakdown and a gap at that area right there. So that's level is 241.24, and that is like this week or next week. Okay. And then of course you have the measured move from the head and shoulders all the way up at 243.80. Okay. So we're getting close. And then the short term, we had J spike led to one down day. So good thing I didn't try to short this. I did it through Kiwi dollar because we were going to have a lot tighter risk. And that was, that's what, where was I had a short term chart somewhere. Oh, this is it. What am I talking about? So here's the 60-minute chart. Make it 2-hour chart. 120-minute chart. Okay. Let's make it 4-hour chart. All right, there we go. So, you'd watch this now. If you did want to, trade Pound Kiwi right now, like this would be how you do it. I think you can see this line, median line here, has actually been really good as support and resistance gap, right? So it was support after the gap. Was resistance yesterday, but so that line now is support, or it's where you would expect to see support, I should say, in the event that we're going to make it to 240, 124, 243. The head and shoulders target 243.80. Okay, up here. So this is your resistance. This is your support. Okay. And if you're wondering what this is, how this is drawn, this is really just a trend line that goes off of this low back here in late April, mid-April. Sorry, I have the hiccups here. And then the June lows, okay? And then you can extend that line basically off the midpoint in time here, and then off the high here. So these would be the levels to watch for as far as support is concerned, okay? And let's see if I put on the good old 24 and 120-hour moving averages. And as you can see, the 24-hour moving average getting pretty close to the median line. If there is, again, we have CPI tonight in New Zealand. So, just thinking ahead, maybe you do get, maybe it comes out hot and Kiwi gets a bounce and you get a pullback and you find support here. Okay. That would be fairly in line with the former price high too. So you have a horizontal 234.70, and then you've got this level here. So, and you get 24-hour moving average. 24-hour moving average support and a really strong trend, which I guess you'd call this a really strong trend. So that's what I would look at, Sandeep, as far as pound kiwi is concerned. Okay. All right. Oh, Christian also asked about pound Aussie. I just looked at Aussie CAD for him, but I wanted to look at pound Aussie for him too. Okay. Pound Aussie is now broken above everything. Haven't looked at this in a while. So you're gonna have to look at this is a weekly. We'd have to look at a new look and a new slope here, it seems. That might be something to look at. How many weeks up is this? One, two, wait a minute. 1, 2, 3, 4, 5, 6, 7, 8, 9. Is that 11? "11 weeks up. What do you know? It's never happened before. Remember pound yen? We talked about, remember that one? That was 11 weeks up. Remember that a couple weeks ago? That had never happened before either. So we're getting into some stuff here with these commodity currencies. Everyone hates these commodity currencies. Eventually, they're going to go nuts because there's going to be an unwinding. Um, you know, hopefully we catch it. So yeah, pound Aussie, 11 weeks up in a row. To be quite honest, man, we've gone through everything. At this point, what's this? Well, you do have this here. That was the slope that I was looking at on the weekly chart there. I'm going to start with because now that we've accelerated through the upside of this, we're going to take a look at, start fresh here on pound Aussie. So this is the one that we have on the daily, right? Same one. But again, support, kind of, we haven't hit the median line yet, right? We've had kind of a lower, kind of like a lowered median line, if you will, because this has really been like the median line, if you will. But, this would be uptrend resistance right now, in pound Aussie. Now, what I want to do is put on, now this is when you shift it, what you have is basically the trend line. Okay, this is the trend line, and that's the same slope as the trend line. So that would give you the channel top up here. Okay, so as far as, there's a couple things here. One, you have 11 weeks up in a row, like we had with pound yen a couple weeks ago, and then it fell 1,000 pips or plus. Tells you that the market's stretched. Okay, we get that, but market can get more stretched. So a level that I'd be watching if we go into pure blow-off mode here again would be right up here, and that's looks to be about 220. Okay, what is this? About 220. It's about 220. You've got a confluence there again. That would be basically your kind of orthodox channel top area, channel resistance, and this median line. Okay. And then 220 pound Aussie would, let's say that if Aussie comes off even harder than it has been, remember, we have an Aussie dollar trend line. Oops. We have an Aussie dollar trend line that goes back to 2001 and 2008, 7 years later, at 7150 or so. Right? So that might be something that you want to plant in your head or write down. is that 220 pound Aussie could coincide with 71.40, 71.50 in Aussie dollar. Okay. So as it is near term, if if there's this is a weekly chart, so there's really nothing near term about it, but um, as it is near term, you might be looking at this midline here, which was support on the break. This is still support. Look at something short term for you here. Okay, so here's the short term one. This is 4 hour. Okay, so we've broken through the median line now on the 4 hour one. So as far as the this is concerned, your focus now is up here. Again, maybe it's 220, but this is support now, the median line right here. So it looks virtually identical to pound Kiwi in a way, because you've got the horizontal level, the former high, intersecting with the median line. This is short-term 4 hours, so you'd be looking at support here basically at 210.35. Okay, obviously give it spread, and you're bullish basically above 208.96. So that would be a place to look at. So maybe down a dip and then a little more rip. Okay. All right, so that is going to wrap it up. I'm going to get this archived and out, and then try to do some deep thinking and figure out where we're what's going on here with the dollar, but work on the setups for tonight and get that out to you guys in a few hours. Okay. All right. So thank you all so much for attending, and have a great rest of the week. Okay. All right. Jamie Saettele here signing off. You all take care. All right.